UK brokerage Marex Group provides commodity trading, market making, hedging and clearing. The company came to the public markets via IPO in April, and based on data from financial websites, the stock looks like a screaming buy. However, those websites have failed to account for a reverse stock split, and they are in fact reporting incorrect numbers. Based on accurate figures from the company's annual report, Marex Group actually has a market cap of $2.6 billion with a book value of $794 million. Revenue last year was $1.2 billion, unlike the $1.8 billion reported on most financial websites, and net income was $141 million. So Marex stock is valued at about 2.1 times revenue and 19 times earnings. That's much higher than the 7 times earnings that some websites are reporting. Even so, Marex does look cheap when you consider its recent growth. Revenue is up 75% year over year, and adjusted operating profit has compounded at 34% a year since 2014. Marex operates in an industry with high barriers to entry. Stringent regulatory requirements have forced many investment banks to pull back from some of the activities that Marex offers. In this context, Marex does look like a company with a decent moat and a highly profitable business. However, there are some factors that suggest Marex isn't quite as cheap as it looks. First, a significant chunk of Marex's growth has come from acquisitions. At least 8 major acquisitions have been announced over the last 10 years as Marex has built up its international business. And it's worth noting that while Marex revenue grew 75% last year, operating expenses increased nearly as much, with a large chunk coming from employee costs. A second reason for caution is the impact of interest rates. The sharp increase in interest rates around the world has helped Marex improve interest income by about $125 million. When you consider Marex's net income figure is about $141 million, you can see that a decent chunk is coming from interest income, and that figure could decrease as interest rates fall. To be fair, at about 8 times forward earnings, investors are already pricing in slowing growth, and this remains a company with a strong moat and a huge opportunity ahead of it. According to management, Marex is only addressing roughly 2% of its total addressable market. Let's assume Marex can grow its top line revenue at 15% per year for the next 5 years and achieve a net income margin of 10%. In that scenario, the company would be reporting about $250 million of net income in 5 years' time. Apply an 18 times multiple and the valuation gets to $4.5 billion, which works out to an investment return of about 10.7% per year. Overall, Marex looks like a solid business and there is a chance of strong upside, but the valuation isn't quite as cheap as the numbers first suggest. That's why I give the stock a neutral rating, but these are my personal opinions, not financial advice, and I hold no position in Marex. For more investing videos, make sure to visit my website at 3minutebreakdowns.com. Thank you for watching.